Welcome back, everyone. I hope everyone had a good day. I'm gonna get straight into it. As usual, we're gonna start off with the first pair, which is the Euro Chef. We can see price is starting to move below the support zone, which is here. So what I will be waiting for in the next couple of days, or possibly next week, or towards the end of this week, I will be expecting a move like this, a couple of bullish candles, or possibly just one candle or one or two candles, and then I will wait to see if price continues down. If price continues down, then I will enter a trade for a sell. Excuse me. Moving on to Euro USD. Euro USD, I did get into a trade on this pair on the 26th. You would have seen this on my previous video. I think it's a day 3 or day 2 of my videos I got into this trade, and we're currently sitting at 18 pips. And if you've noticed, this white candle here, a bullish candle, didn't close higher than previous black candle, which is a bearish. So currently it's signifying that there's still bearish pressure here. Sorry. Wow. Okay, so there's still bearish pressure, as you can see from the spikes. As the candles are moving down, you can see the spikes. So these spikes are when the candle actually made a bullish move up and then was pushed back down by the bears, and they ended up closing lower. So this is what we saw in 2 consecutive days, and today this has been the case. So the candle that has opened here, my guess is that this is going to carry on going down. This trade, like I said, possibly will take a couple of days, possibly might take even a week or two. We can't say. It can also come back up, possibly around here. Possibly it could actually hit my stop loss as well. You shouldn't be disheartened by stuff like that. Basically, this is how the market works. It's all to do with probability, and if you can spot, the direction, the movement of the market, and you need to have a strategy. You need to build yourself a strategy that will give you an edge. So you've got 100%, and if you can get a strategy that will give you a 50% win rate, I think it is, or is it a 55% win rate? I can't remember. That should be good enough. People who have, say, 62% win rates, strategies, and so on, they can do very, very well as well. I've never heard of people having like 100% strategies and 80% strategies and stuff like that. Whether you have a 50% strategy, you should be okay most of the time. Long as you follow your system mechanically, and you never step outside of your check boxes, make sure that all of your triggers are in place, then most likely you'll be on the right side of the trade. So when you do see you've been triggered into a trade and it moves down quite significantly, say like we were on 28, 27 pips odd, and now it's moved all the way down to 18. A lot of people might get disheartened. A lot of people might also get scared by looking at this bullish candle and think that, oh no, price is actually going up, and you know, I'm actually trading in the wrong direction. That is something that you shouldn't do. You shouldn't let your how can I say this? You shouldn't let your, just look at it as there's two sides of your brain. Okay, one side's telling you that, look, no, look at the trend, overall trend is down, so you really don't want to be counter trading this pair. So be patient and wait for your sell signals and sell. So when you get into a sell and a couple of candles go against you but it still hasn't hit your stop loss, you shouldn't think to yourself that, I'm gonna lose the money, because you set a stop loss at an agreed amount. You set it at that agreed amount, so you're happy to lose that amount. Now the only reason why you'd be panicking is if you were using a very high lot size. So say I've got a £300 account, and obviously I've pulled it up to £360 now. But if you look at my lot size, I'm still using 0.01 because I know how powerful that lot size is. With a lot size like that, really, you shouldn't even be, with a balance like mine, you shouldn't even really be thinking about using more than 0.01 lot size. That's what I would say to be on the safe side. I look at trading as it's not a get rich quick scheme. Like a lot of people might show it as that, you just get in and get out and then you've got your Ferraris and stuff like that. All of that is just a lot of, I'm not going to say the word, but there might be kids watching this later on, so it's nonsense basically. Trading should be tackled, should be seen as a long-term investment. That's what trading is. That's how I see it. You should be on the bigger time frames, and you should be holding your trades at least 2 to 3 days or even longer, and you shouldn't really be stressing that you're going to lose money. If you do that, then that's going to make you actually get out of the trades too early, and you didn't wait, and next thing you know, you get out of the trade and you see the trade actually go in the direction that you were originally hoping for the trade to go. So when you see this, when you see price coming back, don't let yourself don't let it dishearten you, okay? And don't get scared, and use the right lot size, and you should be okay. You're not going to win every single trade, okay? You might lose two, but then when you win the other one, if you milk that trade until the end, you'll be in profit. So you need to learn to trust the market and let the market do what it's gonna do. Okay guys, so currently we're sitting at 18 pips. As you can see, price is still going down. We can see the rejection on this bullish candle, quite a strong rejection. So I'm hoping, fingers crossed, that we do get another bearish candle tomorrow by 10 o'clock. We get a nice black bearish candle, so we can carry on holding the trade until it gets down to my desired target. So moving on to AUD chef. AUD chef. So we were actually waiting for a buy, wasn't we? So as we can see, this zone here, I'll just mark it out for you so it's easier. This zone here was not broken with the latest daily candle that was issued. You can see this, look at the candle here. So this is what you would call even borderline price action. So like you would say that the bears and the bulls, they were equal. So price didn't actually go anywhere. It did go down, but pretty much ended up at the same place. It can be seen sorry, I'm actually drinking Coca-Cola, and every time I drink Coca-Cola I tend to get these burps, proper gassy burps. But I'm so addicted to it. Yeah, so basically when you look at this candle, you can take it as uncertainty. So we don't know where the price wants to go up or down, so we keep on monitoring. We don't jump the gun. Nothing with my strategy, there is nothing there to trade. Okay, there might be something there on lower time frames, but that's something that I'm not going to go into because I don't trade lower time frames. So we're going to carry on monitoring this pair, and I've got time. Yep, we'll move on to AUD/JPY. And we can see on AUD/JPY we are looking to buy this pair, but as we can see we have the same situation here, but this candle is a black bearish candle. So this is signifying uncertainty. We don't know whether price is going to go up or whether price is going to go down. By looking at this, the way this looks at the moment, maybe price is gonna go the other way, but we're not sure. So we will also monitor this pair. We have the chef JPY. Same scenario here, as you can see with this candle. So price can go either way. So what I'm gonna do, well, I'm not gonna do anything here actually. We're just gonna watch this pair closely, and let's see what it does. Just like the other pairs, you just sit back and you monitor like a sniper. You just wait until the right moment and then you strike. So what I'm gonna do now, I'm just gonna stop the recording and I'll see you on part 2.